So looking at the background, I mean, this the over the last 5 to 6 years, the taxation compliances in UAE has increased. Starting with country by country reporting, this is for the companies, multinational enterprises, which has a presence in globally and had a turnover of 3.15 billion dirham. So for them, they have to do the specific reporting, and then we all are familiar with economic substance regulation, which is for specific business activities. They need to prove the substance. They need to have a notification and annual reporting. And then we have value added tax and excise tax. Value added, we know the sales and excise for the manufacturing. And then AML compliances, which are for specific business activities pertaining to your banking business and gems and jewelry businesses. And then finally, we have this corporate tax, which is applicable to all the business activities being carried in UAE. And also, it could be applicable for your business activities outside UAE as well. So, we'll see what are those scenarios under which your activities carried outside UAE is taxable. So now, why this was introduced? Until now, UAE has been considered as a tax haven country where people make business, do businesses, but there is no tax, and that's the reason the expats has been working in UAE to form a business. But globally, this was considered as a as a cause of concern that it was not giving a transparency while other countries, other jurisdictions are paying tax and UAE was not paying tax. So to bring it par with that regime globally, so the tax has been implemented, which would encourage the investors, the International Monetary Fund, the other monetary global regulations can monitor well and do funding, which will be at par with other countries when we are also paying a tax in UAE. Then in terms of structure, if you look at, how is UAE jurisdiction, it is, we have a mainland, then we have a free zone, and then we have a offshore. So free zone and offshore are in similar treatment while it comes to the corporate tax, and mainland has a separate treatment in terms of the taxability. And within the free zone, we have certain special free zone, which is financial free zone, and then other free zones, which could be a designated free zone as well. So the tax treatment for designated free zone could be different than your the regular free zone. And in terms of, you can see on the right side, the legal forms which we have. On the blue are the one where it is an individual, a sole proprietor, where the business is not different than what the individual is. The civil companies, partnership, foundation trust, the individual is same as the business is carried out. So the liability of the individual is same for the business. Whereas the legal form on the right side, we can see is the limited liability company, public shareholding company, private shareholding. These are the cases where the legal ownership is, the business is different than the individual, and they form a judicial person. The tax treatment for this judicial person are different compared to an individual, and that's the reason in the corporate tax these are being divided into two categories. Now this corporate tax has been implemented effective 1st June 2023, but it is depending upon your financial period. So if a financial period is beginning 1st July, so the financial year ending is 30th June. So for them, the first financial period, the tax period is 1st July 23 to 30th June 2024. And in the corporate tax, we have one annual return, and that annual return has to be filed 9 months after the end of the financial year. Your financial year ends on 30th June 2024. So 9 months thereafter is 31st March 2025. So one annual return has to be filed. And since most of the companies would have a financial period from Jan to December, so for them, the first tax period would be 1st January 2024 to 31st December 2024. And the annual return to be filed is 9 months after the end of the December, which is 30th September 2025. But there are certain scenarios where you can change your tax period. The companies can look at the memorandum of association where it would mention that what is the tax period. If you see, this is a sample memorandum of association where this has a tax period of 1st March to Feb. So similarly, you can see your memorandum of association where you get to know that what is a tax period. And if you want to change this tax period, you can apply to the FTA for the change, but there has to be a commercial business sense of changing that tax period. But this change in tax period can be done before you file your first return, that is prior to 6 months of filing your first return. So that need to be taken care of. So in terms of the taxation, the tax rate, it is categorized into general or a qualifying free zone person. For a general category, there is a slab up to 375,000 of a business income. It is a business income, whereas in the VAT we see it is a revenue, but in the corporate tax purpose, it is a business income, a net profit. So up to 375,000 of a net profit, it is 0% tax. And over and above 375,000, it will be 9%. So if you are earning an income, net profit is 500,000. So your 9% would be applied on 500,000 minus 375,000, that is 125,000. So the tax would be paid on 125,000, 9%. And whereas for qualifying free zone, it is into two category again. On your qualifying activity, qualifying income, it is 0%, whereas it is non-qualifying income, it is 9%. But first is that they need to meet that qualifying criteria of substance rule and other criteria, which my colleague will take up in the later stage. Under the corporate tax, we need to understand that the concept of judicial person and natural person, and then there could be an exempt and taxable person. So as I was talking about the geographical location of mainland, a free zone, and your offshore, and then we talk about the judicial person. The judicial person where is a limited liability company, public joint stock company. These are the categories where the individual is separate than the business. A natural person is like an individual freelancers who are where the business is carried by the individual and it is not separate as a legal entity. And in terms of taxability, it is categorized into resident and a non-resident. Resident could be either they are incorporated in UAE, it could be either in mainland or any of the free zone, and it could be also incorporated outside UAE, but manage and control in UAE. That means if a company which has a business in UAE, they have also have their setup outside UAE. It could be in Singapore, anywhere else, and the decision making with respect to their board meetings, that the main key management decision making are happening within from the UAE. Though the income could have been earned in Singapore, so that income would be still taxable, but it will depend upon if the key management decision making are happening in UAE. The another category is a natural person. So natural person could be a freelancer doing a business, but it should be a commercial activity which is being carried out in UAE. Like a consultant who is working on a freelancer visa, so that natural person will be taxable on his consulting activities. And then when looking at the non-resident, and non-resident are into three categories further. First is the permanent establishment in UAE. So permanent establishment means like a company which is based out of India and has a branch in UAE. So that branch becomes a permanent establishment in UAE. But if it has a separate legal entity, a separate LLC being formed, then it is not a permanent establishment. It is like a resident being here in UAE, but a non-resident based out of India has a branch that is a permanent establishment. Then derives a UAE source income. It could be possible that he doesn't have a branch in UAE. The Indian entity doesn't have a branch in UAE. It could be like an electronic dealer who is supplying to an agent in UAE for selling his those electronic items in UAE. That income is being sourced from UAE. So on that he will be taxable. Then other category is having a nexus in the UAE. So it could be in any form. Recently, ministry has declared that if a non-resident is having an investment in any property in UAE, then the income earned out of that property will be taxable in UAE. So these are the categories where the person would be taxable in UAE. Now, with respect to the natural person, a natural person will be taxable in different in specific scenario. Now, there are three categories like wages, the salaries which we earn. So, a salaried employee person is not covered under the corporate tax. So, even if he like he's earning a bonus at the end of the year, which is not mentioned in the contract, but a bonus being paid at the end of the year is part of his compensation. So, it is not taxable. And if an individual is also making investment in terms of in the share market, we trade in the market, stock market, that income earned out of that is also not taxable. as there's no specific commercial license being required for that. So that's the reason that is not being covered under the corporate tax. And also a real estate investment. So a person having sub units on a rental basis, he has a unit and he has rented out. So that individual earning and income from that rent is not taxable. Even like he's selling it off that unit, it's not taxable. As such, there is no commercial license being required if he is holding. But if that real estate is under the name of the company, then that becomes a commercial activity and it becomes taxable in the under the legal entity. It could be an LLC or any form of business. And in terms of registration required, since the individual who is carrying out these three categories of business activities, it is not taxable, so the registration is not required. But other than all this, like it could be a freelancer doing consulting activities, then if his income is his revenue is exceeding more than 1 million, then he need to register for corporate tax. So until 1 million, there is no taxability which the individual would be liable for. But if his revenue is more than 1 million, then he's liable for corporate tax and he need to register for that, other than this three category of sources of income.